Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, October 13th, 2021. What I'm going to cover in this video is one of my favorite trade ideas at this point in time right now. It's gold, silver, and the precious metal stocks. I've highlighted them recently. They've been trade ideas here in the last week or so, but I just wanted to reiterate and state that I think these guys have a lot of upside potential from here. A couple levels to watch or to note, I should say, and I'm going to start out here with an overview of the currencies because that's will almost certainly give a bullish tailwind to the gold and silver and the mining stocks if we can get a nice rally in the dollar, which again I've been talking about for a while. It's been priced into the charts. I'm sorry, correction in the dollar, rally in the euro. So we're going to start out here with the euro US dollar chart. I'll go through these charts kind of quickly because I want to get this video out to you guys, and I'm going to go over some individual miners, particularly the silver mining stocks. Those tend to move really nice when you get a rally in gold and silver. So here's the euro US dollar. We're going to start out here on the 60-minute time frame. This is a downtrend line, really almost comes off that high, but I've got it drawn here. I had alternative downtrend lines. Had this little minor one here that was taken out today. We popped, and then this would be your what I call BOD, benefit of the doubt trend line. You have two trend lines close together. You give the second one the benefit of the doubt. You want to see that get taken out because some traders might be watching that first one, others might be watching the second one. Plus the second one comes off a longer point, more significant. And then you really also have a BOD resistance level because you have resistance right there. And the resistance is just a hair above the downtrend line. So they're all coming together, but give it to you number-wise, that's 1.15810 on the Euro US dollar Forex pair. And you can see right here, this is a little area of consolidation and pop. So if we pop it, yeah, you have a little reaction high there, but I don't see a whole lot stopping the euro US dollar till it comes up here. That would be a nice move. That would almost certainly cause gold, silver, and some of the other precious metals and the miners to rally. So there it is, getting out to you guys. Hopefully by this, to me, it looks imminent. I think we'll get the pop soon. But if you want to hold out, maybe if you're not already long, which I think is makes sense now. I like the setups in gold and silver, platinum, palladium, everything I mentioned here recently in the miners. But you could wait to see that pop. All right, go to the daily chart, and what you can see here, your same thing, euro US dollar pair. Big positive divergence. We had divergence here, highlighted it back then, and we did get a breakout. We had a downtrend line, broke out, rallied, and put in another low. And in doing so, we only extended the positive divergence that was already in place. We're oversold. You can look at that alone. You can go back here, look at the oversold reading on the RSI, oversold there, oversold. Usually you get these bounces, and especially when you have divergence, consecutive oversold readings like you had right there. That third one was a divergent low, and then pop, there's a rally, divergence, oversold, and boom, 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 you get it. Okay, so that's the euro US dollar from the daily chart. And then look at this nice support. This is a good old support zone we've had here for quite a while. A lot of reactions on that support zone going back. And so there's the dollar falling down to support. I could see the potential for a one final puke out move, wash out move where the euro bulls just give up, capitulate, you get a little washout move, dollar has a little final spike. That's possible, but the downside's so minimal, it's probably not worth holding out for that scenario. But again, you want to play it safe, there's your downtrend line, same one I showed you on the 60-minute chart. Nice and clean, and resistance just above, so boom, pop that. And same thing, that's just pretty much the 60-minute chart I just covered, zoomed in there for you. And then, of course, there's that long-term chart. I've been covering this one for years. This was a major breakout in the euro against the dollar back here in late 2021, or mid to late 2020, that is, I'm sorry, right there. And we broke out, hit that 122.617 target resistance level right there. pulled back, had a back test of the downtrend line, rallied up, hit it again, pulled back again, and another back test. So back test 1, back test 2. We've already hit it a couple times, maybe another reaction, but this is the bigger picture. We could see some, we've already seen, by the way, guys, a trend reversal. That's the bigger picture, and a lot of people fail to recognize that. Dollar's been going up, up, up. Dollar's been going up. Euro's been going down. And here's the thing: gold's been holding up, and I pointed that out. Usually, you'd see a bigger drop in gold, silver, in the dollar-sensitive precious metals. So it tells me there's been a bid underneath those guys, the gold and silver. There's just been a headwind with the rising dollar lately, but that's near term. This is that near term trend. This is bigger picture right here. There's a major reaction low. There's positive divergence on this weekly chart. Again, another divergent low with positive divergence as well at that time, and that was a higher low. And we could even come in from this trend line and still put in another higher low, and that's the makings of an early uptrend or potential. You have a high there. Now I will say you're going to need to take out that previous high. Now, if that happens, it's going to be a heck of a run in gold and silver just to get there. But just keep in mind, that's longer term stuff. And so longer term, you want to see the euro US dollar take out that 126, we'll call it 127 level right there. And then that should run us all the way up there to the 140. And at that point, no one will be able to deny that we're not in a new primary bull market in the euro, bear market in the dollar, and that should be quite bullish for gold and silver. So work to be done on this longer term time frame, absolutely for sure. First and foremost, let's see if we can get a reversal here off the trend line, and that should happen if we get a breakout on those 60-minute and daily rising wedges I talked about. All right, so for those of you who want to trade the dollar, and I'll get to the metals here in just a second. Of course, let me update the one of my preferred way to trade is futures. You have DX, US dollar futures, 60-minute chart. Here's an uptrend line right there. There's your divergence line, and that gives you that bearish rising wedge. Pretty steep divergence down here on the PPO and the RSI. And so pop, that's what we need to see. So these all line up together. You're going to see, if you see that euro US dollar chart break out on that wedge or the downtrend line I just gave you on the dollar daily and 60-minute charts, you're going to see this happen. That's going to be bullish for gold. Likewise, if you want to trade the euro instead or watch it, you want to see all of these break out, and they do. They move together, and it's simple stuff. The correlation here is pegged because this is the U.S. dollar, or the euro is a 57.6% weighting in the dollar index. So it's just mathematical. It's just almost near certainty. It's by far the largest component. Again, I talk about some relationships that are correlated or inversely correlated as being on and off, such as gold moving up or down with what the dollar does. That can be an on-off relationship, but just like I talk about with treasury bonds and interest rates, that is an immutable relationship. It is a one-to-one correlation, and you're going to have a near one-to-one. Not perfect, because 57.6%. Nearly 2/3 of the dollar index is the euro, but then you do have the yen at a distant second, and then all the other currencies there as well. So they can also impact the dollar, but there's what you need to see happen to the euro. Pop, pop, pop. Potential targets. Let's just target right now. If you're just swing trading and you want to trade the metals or trade the currencies, let's just say that's my near-term target there. 0.1688. You want to put your sell limit order a little bit below there, and same story. There's my benefit of the doubt, or BOD, secondary trend line, and the resistance just above at about right about 116 on E7 Euro futures. Okay, and to quickly run through the charts of the metals themselves, that's where I imagine the majority of you will prefer to trade versus currencies, and that's the point of this video. There's that long-term buy zone. Been harping on it forever and a day. Even when gold peaked back here, it was my pullback, buy zone. Solid support at the bottom of the zone, moderate support at the top. We hit the bottom there. Almost came about 2/3 of the way down there, and then again recently, and gold is back above it, which is bullish, starting to move up. And again, bigger picture, I view this as a consolidation. This whole thing, that correction off the highs back in 2020, is bull market consolidation, and we are certainly still within a bull market. Gold's been sucking wind for the last year or so, and again, that's nothing goes up forever. It's been had a strong run up to that point. That's where we hit back here, and that's where I suggested even long-term investors book profits, get out of those positions, and maybe even consider shorting, and that's what we had there. So there's plenty of time to correct, and it's been largely a correction in time. Now I know a lot of eyes probably see this and think it's going to be a repeat. But I'll caution you, when things look too similar, anything's possible. And I've said it 100 times. Break below bottom of my support zone, a solid break is going to be bearish. But so far, we're that support zone is here. I think that's where we're at. The one I just showed you on the daily chart, and I'm looking for an upside break. And again, gold's also launching from a higher level. This was at the end of a prolonged bull market there, and then you had a bear market in gold, and we resumed here, bull market. Over time, things only go up. We're in the hottest inflationary environment that we've been in since the 70s. And yet here's gold, which typically back then it ripped with inflation. It has many uses. One of those is an alternative to the dollar, flight to safety, and of course there's the industrial applications in gold and silver, which I think are being discounted. We saw huge rallies in platinum and palladium, and aluminum's on fire right now. Those are industrial metals, and I think the market's been treating. One of my theories is corrections went on longer than usual because I think everybody embraced Bitcoin as the next proxy and wrote off gold, even though gold for thousands of years has been a store of value and a quasi or proxy currency. And I don't think that's going to change anytime soon. I think the cryptos will they'll have their niche where they have it, but as far as replacing gold, I don't see that. I'm just trying to make a valuation case that in this inflationary environment, gold and silver probably due for nice moves. And then say what you want about it. Either I'm going to be right or wrong on the dollar, and if my outlook on the dollar, my longer term bearish outlook on the dollar is correct, I've done this many times. I've showed you overlaid the dollar and gold, and you can see the nearly unmistakable correlation. And that's a simple one because gold, at least the gold we're trading here in the US, GLD, the CTF we're looking at, or bullion or futures, they're priced in US dollars. So if the dollar goes down 10%, it's going to take more dollars to buy an ounce of gold. So the price of gold is going to go up. So that's the reason behind that correlation. Okay, more recently, this is where on the 60-minute chart of the futures of gold, GC, which I'll get to in a second, I've been covering, I point out, I look for these divergent lows right there, divergent low, there's a divergent low, there's a positive divergence, and just like I look for these divergent highs for sell signals to get out of longs and or short. So last time here we had a divergent low, went up, popped, hit that T1, never came all the way to T3, made a marginal new low, an equal low there. You can see that, and really that divergence is only extended. So I know I'm making a mess of things down here, but let me just draw that out for you again. This right here, this is the same divergence, just getting larger and larger on this 60-minute chart, because that's roughly an equal low there against lower low or higher lows in the indicators. And so, yeah, these are all still potential targets for GLD. Now let's look at gold futures, and we'll get to silver, and then some of the miners, which I just really like. All right, let's look at GC. Give me 1 second to find it down here among my futures. All right, this is I had to recently switched over to using a 120-minute chart, 2-hour candles. Goes back 6 months. Big level here, in my opinion. That 1838-ish level right there. We're checked several times on that level, and that's still a target, and it's been the target since this last long entry here, based off that divergent low. Then we broke out of the downtrend line, back tested, moving up, hit my 1781 target there, and it was resistance, and now it's been taken out. So there's boom, right here. We'll zoom in a little closer. So that's why I'm doing the video. Here's a breakout above the first target / resistance level on one little level. If we happen to pull back here, I'm going to show you a level that buyers will probably come in and buy gold. I think the breakout's going to stick, hence the reason for this video, but there's some support right there. But right about 1768, I'm going to remove that trend line, just keep this chart nice and clean like I like it. That's it. 1809, 1837. If when we get there, I'll do an update, give you my thoughts, probably get at least one more reaction, and then ultimately breakout would be very bullish. There's been a lot of rejections there. You'd see a lot of short covering, a lot of bulls, gold buyers stepping in. So that's GC, and then talk about quite often, not always, but usually you get more bang for your buck if you want to trade silver instead of gold. So silver futures, the symbol is SI. Big level to watch right here, that downtrend line. This is also a 120-minute chart, 2-hour candles, 6 months of price history. Big positive divergence building. And there was a recent buy signal there on a breakout above that downtrend line. And now we already hit that 23. That's also a big level, 23, just over 23. I have it at 23.055. Look at all these reactions there, here. So if we can pop it, run up there, hit the trend line, break that, that's bullish. Break 24, even more bullish. And again, from the scope of this pattern, be looking to run up to at least right here. Right about there, give or take, about 25.85 in silver futures. That'd be a nice swing target. That's certainly, you take the widest part of a wedge, add that to where a wedge breaks out. That's your measured target. So there's certainly more potential. But if you want just a near-term target, again, that's certainly resistance. So if you're long from back here, that's your next potential place to take profits if hit. But at this point, I think it might not be a bad idea to kind of morph into swing trading mode and ride out any of the little pullbacks, unless you're a very active trader. It's not wrong trying to game a quick pullback off tags, the initial tags of those levels. But other than that, maybe just sit tight, raise your stops, and let it run. And if you trade the ETS SLV, that's your ETF for silver. Here's your positive divergence on the 60-minute chart right there. There's your resistance, 2136. So it's nice because you have horizontal price resistance and the downtrend line coming in together in close proximity. So you pop that. 23 would be my first target, 2450, and then about 2638. That's the 60-minute chart. And daily chart. Ooh, you just gotta love this. Look at this. Look at this line. I've had it coated up or color coded yellow. 2053 roughly right there. Good support in silver. You had a big gap up here right there. There was a series of gaps with another gap there. So you have a candle. There's a reaction. Number 2, number 3. We danced here recently on that level and then broke down. So you might say, well, Randy, that's bearish, right? Well, no, that's actually very bullish because that is what we call a bear trap, aka false breakdown. Shorts are watching that level, pile in, they jump in. Weak-handed longs get shaken out because that's logically where most of them would have their stops. And then for those that shorted, and even those that sold long, it's a rut row moment when they see, we reversed, the breakout has failed. And so that in itself, when we recovered it, is a bullish event right there, false breakout. And so now all we got to do, a little more work to be done, pop that trend line, those levels I just gave you on the 60-minute chart, and it should be smooth sailing for silver. There's your next target there on the daily chart. So there's, again, roughly go off what I said on the 60-minute chart of this. I think I said 2250. It's 2276 here, about 24 and 2635 or so. Okay, I could talk on the miners forever. I love looking at them, and I do that. I'll comb over every component of GDX. Plus, I have multiple watch lists of gold and silver mining stocks that aren't even in GDX. But I'm going to go over the silver miners. They a lot of bang for your buck when you get the gold and silver running up. They tend to move a little bit more than the gold miners quite often. So this is one of my watch lists. This is EXK, Endeavor Silver. Divergent low, got a rally, put in an even bigger marginal new low, still positive divergence building the whole time, which is indicative of an even larger move than the previous one. There was your breakout recently. It's been running. It's at resistance now. I don't even have levels on here. It's just something I'd just let go for the time being. If you see everything that I just talked about on the dollar and the euro and gold and silver, we get all those levels broken out and they're running. This guy, I can guarantee you, will run more. That's why that's why I like trading the miners. They're pretty much, like I like to say, a leveraged play on gold. The only time that doesn't work out is if the market is in meltdown mode, because they are equities and they can underperform the metals themselves if the metals are rallying. But right now, market continues to be resilient. So, it's been moving lower lately. It's in a near-term downtrend, but it's anything from impulsive selling. So there's your levels. EXK, FSM, same story. I won't go over each and every one in detail, but the common theme here: positive divergence at support. A lot of these stocks coming off big support. 375. There was support there. That was taken out. 419. Recovered. Taken out again, but we're back above it. So this guy looks good all the way up there to 590. Just to try to put in percentage terms, like everything else, there's a little bit of a resistance just overhead to be taken out. That one's about 465. But from where we're at now to that 590 target, you're talking about a 31% rally. And that would be my swing target minimum on this based on these divergences. SVM, Silvercorp Metals, nice downtrend line breaking out today. So there's an objective entry right now on that one. USAS, a little cheapo here, penny stock, 81 cents, but you tend to have more upside, much more aggressive. You don't put as much in this, but this one has the potential to run up. I think it'll run up here to that 124 level. Stocks that drop under the dollar level, it's a big level. Companies do whatever they can in their power to get that stock back up above $1 so they don't face delisting, which they will if they trade too long below $1 share. So that one, look at about a 50% return on that if that 124 target's hit. SLVP, if I'm, your head's spinning from all these stocks and currencies and metals that I'm covering, just you can buy an ETF. This one has, this is the iShares Global Silver Miners ETF. Beautiful looking chart in my opinion. Again, hence the reason for the video. Downtrend line, we had a wedge there. And it was at support, and I did highlight this one back then, and it broke out, and it did run, but it ran into big resistance right there, and that was the first target too. So that target was hit, 1436, but it pulled back and it made a back test of the trend line, and it's just above support. So this is where there's a potential on some of these charts like this one, because it never hit that next support level. It could take that last jog down, and if it does, I'll be doing a video here. The charts still look good if it pulls back to about that 1158 level. However, I don't think it will. I wouldn't wait on that. We see a lot of these starting to reverse pretty hard off the back test and also breaking out on resistance levels. So 1436 is still the next target again. That's 8%. Then the top of the range if these bullish developments stick. And the breakdown in the dollar sticks and the breakout in the euro, everything I covered earlier in the video. So you're looking at about, just to get back to the highs there, that trading range, you're talking about 40% or so. And again, you'll get more bang for your buck trading the best looking individual miners. But there's something to be said about the diversification of an ETF, the relative safety from that diversification, and the simplicity of managing just one position instead of multiple positions. So that's SLVP. That's the sector itself. On TC2000, IX 1120 is just the silver mining sector. Looks same thing at support. Look at that. Nice, almost a perfect reversal off support, actually, the sector itself. So that I would go more off this chart. And so that one did hit support, and it's moving up. So nice looking chart. AG, First Majestic Silver Corp, positive divergence there. Failed to launch on that breakout. Put in a new low, but it was even the same divergence, even larger, and starting to move up. SIL, there's one, this is a nice one as well. It's a Global Silver Miners ETF, another one, there you go. Nice support there. Tag of that about 34-ish support right there, reversal. And I'm not going to force a downtrend line, but I can tell you this is pretty big resistance right here. So if it can get over that, it should run and quite likely back up to the top of the that multi-month or almost multi-year trading range, about 34%. I'm referring to all this right here, this boxed in. So that would be your potential swing target, and then very bullish if and when that breaks out to the upside. PAAS, Pan American Silver. All right, so you get the picture. You can go across the board, look at a lot of silver stocks. Birds of a feather flock together, so it's not, unusual that a lot of these have the same technical posture, and that a lot are either currently breaking out or poised to break out. And you can see the levels on this chart. That's about 26, 29 and a quarter, 36 and a quarter, and then the highs up there, which is about 40 and a quarter, let's say. ASM. All right, guys, I can go on and on, but there's no need to. It's all same stuff. Here's another one I like, WPM, Wheaton Precious Metals. I'm going to wrap the video up here and get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.